Okay, guys, so I got to talk to you about a present, and I got to say this, a present correlation between FNGR and something else, and that presents us a great opportunity. Now, the great opportunity would also present us with some downside targets, but before you log out, stay and listen to see what that actually turns into. So before we get started, please do me the favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. My name is Arca, coming at you here, guys, at 10:59, just about 11 p.m. Pacific time on Thursday, November 6th. Spot price on FNGR post-market closing at 138, daily time frame 138. Actually, let's just go ahead and make sure that that is completely at, yep, just 138 post-market. Okay, so I want you to take a look at this shape, right? Just what we have here, and I'm just going to show you here the index, which is known as the IWM. It has kind of there is a bit of correlation to it now, right? So this is a whole new thing, the way that it's presently showing itself like this, right? So it for a long time it grew inverse the market, inverse the IWM, which is the Russell 2000 representing small caps, right? So, but with that said, I would like to visit the analysis first on XRP, on the FNGR particularly, and show you here what I am looking at as far as a support bound. Now, the most obvious support bound, I will talk to you later, right? But the reason why is because there is something on this particular immediate downside that we should be looking for and that we haven't tested just yet. So if we can observe this like from a weekly time frame, maybe, so we can drop the grain here, so we can start seeing more clearly what this is kind of looking like. Well, you're gonna catch some immediate supports, like, for example, this zone here, right? Somewhere around this pocket here, because as we come back and touch it, look at this, right? We touch that bottom side via this little tiny wick down here, right? And we kind of stretch the price, right? This wick at the low came very close to this point here. In fact, that should have been what we tested. And also this, it should have been what we tested. But what we tested actually at that low was actually the top of this area here, and catching the support from this bottom side and near the IPO of this company. So let's just do this, right? So, I mean, I can go ahead and just enable the drawings here, and I will just draw, you know what? I'll do it like this instead, because we still have a full chart here. This top side, right? Let's do it like this. No, sorry, this bottom side. Here we go. And just like that there. And that's presently where we came down to. Right there. Let's do this. Look at that. Right here. So that's what price action is essentially kind of doing, right? It wants to come back and validate that. But since you had a bottom side like this, which was the top area that we looked at, this one here, right in there, this top zone with this top zone here, since we have that existing, that means that this was a liquidity grab, right? This thing came down quickly and then recovered and made its upside, which still is relevant. It is very much relevant, except that we absolutely have ranges that we need to be aware of. I mean, infinitely. Number one, I'm not saying that we're going to go down to this level, but if we did, I think it would be an outstanding opportunity, as there are a lot of buyers down there. So we're looking at the supports of either 130 to just about 128 with a liquid bottom of 125. I can't say that the 125 would be anything. Honestly speaking, I really feel like the 130 area to just around 128 has a lot of rhyming. But it, again, I'm not saying that we are going there, and I don't even know that we can. So now that we're kind of deep into this video, I'm going to display to you the targets and the reason as to why I think we may actually reject this, reject the bottom sides that we were just talking about, right? Okay, so here we go. Now, while I draw these targets, I just got to let you guys know, right, that should you join the Arca Bulls trading team, guys, I will never message you first. I'm not coming up to you to greet you or to say like, hey, welcome to the team or nothing like that, right, guys? That's not what I do, right? And there's a lot of scammers out there that are doing that, and they're trying to take over my name just to kind of get you to you know, pass me your XRP or whatever, give me your wallet for crypto or something, right? You know, or get you to think that I'm gonna throw you some bones or something. Guys, just don't do that. I will never reach out to you first, never friend request you first or anything like that, okay? So just heads up on that, and everything will be cool. All right, so I'm thinking here that we have the bottom. So yeah, I think I identified it. Let's see. Yeah, man, we're already at a gap there. That's insanity. Okay. Yeah, this would be the area here, guys. I really just have to make my mind up on this. Yeah. There's the other gap. Perfect. I know it's really all the way down here, but it's similar to the targets that we were talking about. In fact, I do have to acknowledge that. So here we go. Number one, here's what happens statistically. Your weekly time frame and especially your bi-weekly time frame, take a look at the count. See, it's coming down to about 13 hours 53 minutes. So statistically speaking, your 2-hour time frame being twice the size of your weekly time frame starts to retrace the market, meaning it decompresses at roughly 13 hours prior to the close. We're at 13:53 in an hour. This is likely to start its retracement. So now, because there is a retracement happening, your daily time frame experiences something, right? When you close the bar like this, what else did we close? Did we close a 2-day? No, not yet. Almost closing it though. We closed a 3-day time frame. We also have a new 4-day, but it's not closed. Okay, good. And let me just check your 6-day here, because this is going to start getting juicy at this point. This is where I want you to listen. Okay, and let me just check this day here. Nothing. Perfect. All right, so your 3-day time frame was the one that we identified as closed alongside your daily time frame as well. Typically, when you open up a new bar, right, like the new 3-day bar is going to open just like your daily, right, you tend to create something called a peekaboo. When you open this bar here, it's going to give you the impression that you're going to move towards the upside. Sure, you can move up a little bit here, right? You can actually come right to this resistance at around 140, just 2 cents up, get this resistance, and then come back down to give you a fake out. So this fake out would be a bear trap. And I'm thinking that's going to happen here pretty soon, or a liquidity grab of sorts. So when we come down to this area here, you're not facing just a regular support. You're facing historic supports in your larger time frames, your weeklies. There are gaps there, just like these supports are all over it, right? So just like these here. So if it is that we're going to come down to that area, then we can identify the secondary zone, which we said it was around 136, right? So if we look at now on a 3-day time frame that we didn't actually, interact with, look at this. Your area of about 134 is just right here on this gap. So another reason for us to maybe not even be able to get below that zone. So that's what I'm really thinking. I'm thinking that your support bound is what we just drew here. So we have a 50% or a correlated area that would be roughly at this point. So focus would be this. This is a focus zone as far as what I'm thinking as a potential buy zone, but guys, do not take that. Remember how FNGR can be. This thing could be ruthless, and it could just, flip a script here and then whatever else. Okay, so yeah, this is the area that I'm looking for. for kind of a macro bounce here, guys, it would be a pretty juicy bounce from that zone. So let's put in let's put in these things right over here, guys. Just like this, just like that, and just like this here. Okay. Now the psychological reason. Here's your psychological reason. If you remove all of this, right, and just head over towards like a monthly time frame, well, when you're observing what you're observing here, right, and let me actually add a bit of volume as I want to know how that's looking. Let me get myself out of the way. Okay. Yeah. A little dangerous. It's confusing here because we are in fact dropping in volume, right? But we are also increasing in volume too. Right? Now your monthly time frame, it just started. So the monthly low would be located at like literally 40 cents, right? But again, we are at macro supports. Huge gap right over here, right? We're talking about your 134, 130, your 130s area located within massive supports that are months worth, right? That's what I really mean, that these are actual, tangible supports. So my theory is that there could be some type of liquidity grab. Should it be that we liquidity grab there, that means that your 2-week time frame on its average pulls back to the 50%, which means that if we do see that 134, the 50% of this bar would be located right about this point here at 151. So hard targets on the 151 would naturally be anywhere between 145 to 151. Yeah, 145 to 150. So 145 to 150 can do a lot from something that's jumping from 134. This has 12 cents to the upside, guys. That's putting you close to around 150 already. That is called a reclaim of structure and a false breakdown. Why would that be the case? Because 151 and 150 is located right in this area here. Right in this resistance. And you're reclaiming the structure of all this. So now we have to use all that momentum upside that we got from the immediate short term and break out of that area there. So that's what I got there, team. Okay. Yes, there is a very bearish formation everywhere. But I think that it has a chance for an upside here, guys, coming in. And let's see what it does. And let's see how it affects it as we break above the zones of 145 into the areas of 147 and 150 and 151. I want to know what price does above that. Okay, there could be a psychological something there, guys, because the last time we came and bounced from this area down here at 136, look what happened. 136 to where? 150, right? Looks familiar, huh? So let's see how that feels. The 150 retraced back to validate these lows here. So we would validate 141 to around 140. So from here, come back down 141. And then look what happened. 165. Pull back, validate this area on top, right? That's your zone of around 150 that we talked about. And 150 then turned into 178. Let's see what it does, team. Let's see how this behaves. But there's a lot of correlation here. There's a lot of something. And this is also telling me that your broader markets are likely to lead the upside. Now, how is that possible? Well, that's possible because of this. Check this out. The IWM is growing in correlation to the SPY. This is your correlation coefficient. We're almost done with this video here. Your correlation coefficient is already, look, I'm just going to show you like the settings, right? We have the SPY here, the S&P 500 broader market index. It's correlated on a 6-hour time frame up to just about what? That's about 70% correlated. Your 8-hour time frame is growing, and you're growing into the 12-hour, and see how all of these face down, but your 4-day and 5-day are still massively correlated to the upside here, 95% correlated. So what does that tell me? This 98% correlated to IWM to the SPY. that tells me this. Let's go back to Fngr and finish it off. This is your 3-hour time frame correlation to the IWM. So as we look at these immediate short term, they are growing in correlation, right? Look at that. 6-hour time frame sitting at just about 80% correlated. You're growing into the 8-hour time frame. This is about 73% correlated to the IWM. Your daily time frame went from inverse now to starting to correlate, right? You have your bi-daily time frame with a turnaround here. It's starting to correlate. So what this means is that we're starting to overall correlate into the major time frames. So that's what I'm basically saying here, guys. That Fngr is getting forced to correlate into the markets. And if we have things like, you know, like your 2-month time frame on your IWM against a SPY, so that means that Fngr being correlated to IWM and then the IWM being completely correlated to the SPY means a gigantic upside is on its way. And we have validated upsides. Oh my goodness. That's what I'm just gonna basically say here. Okay, so this is a pretty good place to leave off the video, guys. Should it be that you want to purchase some of these tools from me, guys? Look in the description below, and you'll find the links there, guys. Trade like me, right? This is all live data that you can get as you trade. All right, team. Well, this is a pretty good place. I will talk to you guys very, very scary Jerry Larry later. All right, guys. Peace, 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 and peace, team. Adios. Please take whatever I do show and iterate within these videos as just a form of entertainment, as they cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very good rest of your night and or day. And I will catch you at the bell mañana. Adios, team.